Hello traders, and welcome to my video on the evening star candlestick pattern. Now this is a very rare candlestick pattern that you will not find often on your charts. However, when you do find one, it is very good to be aware of it and what it can signify. So basically the evening star pattern can be a sign that the market is going to have a reversal. And what you're looking for, this is a 1 hour pound dollar chart. And what we're looking for is a candle where the price has opened away from the close price and the following candle opens away from the close price of the candle that we're looking at. Okay, just to make it easier for you, I will show you an example here. So we've had an uptrend. Okay, which is at the end of an uptrend is where you usually want to look for the evening star candlestick pattern. And here, if you look at this candle, it opened away from the close price of the previous candle. So there was a gap. Okay, and importantly, the following candle did the same. It opened away from the close, thus another gap. Right, so this signifies that this trend has potentially come to an end and the market is going to fall down. As you can see, it did fall down quite significantly, which shows that when you find these rare evening star candlestick patterns in the right place, they can be a good indicator of pending reversal. Okay. So, how do you use, once you spot it, how do you use it? Well, you can just enter blindly if you want. I personally wouldn't recommend and wouldn't do that myself. Although if you did that in this instance, you'd be up over 150 pips with a stop loss, a really tight stop loss just above this resistance level here. So you could have taken the trade blindly, had a 10 pip stop and made a potentially high return on that particular trade. However, what I would do is mark the resistance level, mark the candle, and then just use other indicators, price action and support and resistance to time the entry. Okay, so you could wait for the trend to play out here and then wait for a pullback here. You can see, so you have your pullback here, you have a spinning top candlestick pattern which suggests that there's some indecision in the market, followed by this big bearish bar, suggests that the bears have won this particular battle and the market will continue in a downwards direction. Okay, let's add a ADX indicator. So basically the ADX indicator is used to identify trends, market trends. When the green line is above the red line, the green line being the plus DI, the red being the minus DI. When the green is above the red, it suggests we're in an uptrend. When the red is above the green, it suggests we're in a downtrend. And I've added this 20 level to the ADX. You can change the level there from the settings. I've added the 20 level just because I find that when this main line, blue line here in the ADX is above 20, there's some momentum in the direction of the trend that the ADX is showing. So we're looking for a downtrend once we've seen this evening star candlestick pattern. We're going to look to time the entry. So the ADX has a crossover there to the downside. The main line is well above 20, showing that there is some momentum in this move. And we could have used that to time our entry, perhaps on the low of this bar here. Placed our stop loss again above the area of resistance, and still we would have been in this trend relatively early, more or less at the start. So that's using the ADX for an entry point. Okay, other indicators you can use, you have the stochastic oscillator. In fact, this may have been good confirmation to take the initial signal, because how the stochastic oscillator works is when the stochastic oscillator is here, this is known as the overbought zone, and there's a good chance that price will fall, just as if price is here in the oversold zone, there's a good chance that price may rise. You also have the main line and the signal line. When the main line crosses below the signal line, it suggests bearish market, and vice versa. When it crosses above, suggests bullish market. So traders look for crosses really in these extreme overbought zone, anything above 80. Look for a sell trade, or in and around the oversold zone, 20 or below, have a cross for a buy trade. So if we look at this evening star candlestick pattern when it happened, the stochastic was actually crossing down in the overbought zone, which could have been confirmation that this is a trade worth taking right away, not to mention the ADX is also saying that's the case. Obviously, there will be instances when price will continue moving upwards. This is why we have a tight stop loss to cut losing trades short, and also why we don't exit trades prematurely as soon as we see some movement down, panic and take what's on the table, because we'll just leave too many pips behind. What I would do once in this position is, as price is moving down, just move the stop loss. Say this is the stop loss here, I would just move it above the levels of resistance. As price is falling, just bring the stop down above this one, just to lock in as much profit as possible. You can also close out part of the position and just lock in the rest for profit and see what happens. Watch the trade play out. Again, this is support come resistance here, so your stop loss, if you price is down here somewhere, you're still in the trade, you might want to bring your stop loss up to here. Okay, and yeah, there's literally thousands of different ways that you can enter the trend that was signified by the evening star candlestick pattern. The most important thing is identifying it first on your chart, and then deciding how you're going to time your entry with the help perhaps of other indicators such as the ADX, stochastic oscillator, even the MACD here. So basically the MACD, let me just make those bars bigger. Okay, that doesn't want to work. Let me just, there we go. So basically with the MACD, what you're looking for is for the bars here to fall below the signal line for a sell trade, or above for a buy trade. Traders as well watch the zero line, which is the middle line here, crossing of that. However, that can also be lagging. You can see the crossover of the signal line happened here. Why would you necessarily wait to this point? I don't know, but we've had our evening star candlestick pattern here. Confirmation from stochastic, confirmation from the ADX. If we wanted to throw the MACD into the equation, we'd wait for the price to fall below the signal line, which it does here, which coincides nicely with that outside bar, or even if you want to call it an inside bar. Swings and roundabouts, doesn't matter. It's all signs of bearish market movement. And we could have taken an entry here, as I said, with a stop loss just above there, around 20 pips would have been a good place to time it. If you relate to the party, again, the pullback here, the stochastic crossover, the ADX, all suggesting this would have been a time to start looking for a trade, although the MACD didn't actually agree in that instance. It wasn't until then. Actually, in fact, the ADX didn't agree with that, so that would have kept us out of that one. Which is why it's good to combine indicators, really, because there'll be instances where they won't all agree and can keep you out of trouble. Granted, there'll be instances where they don't agree and you miss out on a trade, but more often than not, you'll find the more confirmation you can have from various indicators, price action, candlestick patterns, the better. Don't forget, some indicators are lagging, so as I said, you can miss good opportunities by just waiting for them all to line up perfectly. Okay, well, hopefully you found something useful in this video, whether that tells you how to take good trades or avoid bad ones using sensible money management. Just remember, there's a million different ways that you can put trading strategies together, so what works for someone may not work for someone else. Thank you for watching. Please like and subscribe for more.